Hello traders, welcome back to UCFX. So welcome back to another episode of Learn Smart Money Concepts. So in this episode, I'm going to be talking about the Wyckoff schematics. So if you're just hearing Wyckoff schematics for the first time, at the end of this video, I'm assuring you, if you pay full attention to this video, everything I'm going to be saying in this video, and doing enough backtesting, I'm assuring you that you understand everything that has to do with Wyckoff schematics. But if you heard about it before, you're still gonna gain value in this video, so stay tuned. Yeah, in an uptrend in the forex market, when the market is about to reverse to go lower, there's usually a period of consolidation right here. In this period of consolidation, the smart money accumulates orders. How do they do this? They accumulate orders by taking out the buy stops above these areas, thereby to take price lower. Likewise, in a downtrend, when the market is about to hit a specific area, let's say a demand zone, the smart money as well accumulates orders here. So they accumulate orders by taking out the self stops that are below this area. So in this scenario, we call it accumulation, and this scenario is what we call the distribution. So in this Wyckoff schematics, you're gonna be seeing the Wyckoff accumulation and the Wyckoff distribution. So you'll be asking yourself, what is behind this idea? What is behind why do the smart money do this kind of stuffs in the market? Let's say in a situation where the market is about to hit a specific order block or a demand zone like this. So what the smart money does is this: they try to induce sellers. They try to bring in sellers as much as they want to be able to add their long position to continue to their intended direction. So they kind of generate liquidity. As you can see here, we have trend line liquidity. They try to bring in as much sellers as possible to add their longs to finally go to their intended direction. And as well, most traders actually know what is about to happen in the market might start longing from this position, thinking that the market will actually reverse from this point, but they will eventually get taken out. They might enter again, eventually get taken out, and they lose courage. They no longer want to participate in the market, and then by leaving the market. Hence, the sellers are more induced to taking new shots each time the market breaks down. After that, the smart money accumulate their long position when they have gotten enough sellers into the market, and thereby taking the market into the intended direction. As you know, before you can be able to buy in the market, you need a seller. So they will bring in more sellers as they need to be able to accumulate their long positions. So here we have on our screen the founder of the Wyckoff schematics, which are D. Wyckoff. So he's the man behind the Wyckoff schematics. So this is what actually the Wyckoff schematics looks like. This is the Wyckoff accumulation. After a downtrend, we have this schematics in play. So we have the PS. The PS is actually the preliminary support. This is where the market is actually showing that the down move is about to end. Then we have the XT, which is the selling climax actually. So this is actually indicating that this is where we have the selling pressure actually reach its climax. That's the peak of the selling pressure in the market. After that, we have the AR, which is the automatic rally, signaling that the selling pressure is actually diminishing. And after that, we have the ST coming back to mitigate any other block, any other block in this area. Then we have the break of structure, breaking this automatic rally. So this is actually telling us that the market is about to reverse, it's gaining strength. And after this, the buyers are actually stopped out. You can see that they are actually stopped out because some buyers are actually getting in early before the intended direction. So at times in the market, you might be right about a specific move, but at the end, you will be kind of stop hunted. So this is what actually happens After they must have taken out this AR, they come back for early buyers, people that are actually entering the market early. They will take them out, thereby inducing more sellers into the market. And there we have the ST in phase B. Here in phase B, market goes back to test the AR. After then, we have our spring taking out this low as well. Thereby, more and more sellers are now in the market. As you can see, we have a kind of a trend line. We could have equal highs. So there are lots and lots of sellers induced into this market. And here we have the spring. After the spring, what next? The market goes boom. So how can you actually get into this market? How can you trade it? You actually mark out your seller's climbers, mark out your ST in phase B. And after a test, after the spring, you usually have a test to this ST in phase B or seller's climbers. So this is the area where you actually get your entries. So you will actually be taking your entries and when the market is actually in when there is volatility in the market, yeah. So when the market is, let's say in London Open, you'll be waiting for entries in London Open or actually in the London New York section. So you will avoiding anything that has to do with Asian section because they will usually drive liquidity before making this up move. Let's say the Asian section might be somewhere around here. So London Open, they will take out all the liquidities. After that, they will continue moving in the intended direction. So this is exactly what happens in the Wyckoff schematics. So whenever price is about to reverse to go upwards, let's say after entering an order block, the market will play out these stuffs before moving up. So we will actually be looking out for this in the real chart as we proceed. As well, in the distribution schematics, this is what the distribution schematics looks like. You have the preliminary support, the preliminary supply, you have the buyer's climax where the buying pressure is at its peak. And after that, we have the AR showing that the buying pressure is actually diminishing. Then we have the ST as a secondary test, testing the supply in this area. After that, we have a break of structure breaking the AR, showing sign of weakness. You can see it S of W, that sign of weakness in phase B. After that, we get the U-tap. After the U-tap, it then gets another U-tap test before the market starts to rally down. So in this distribution, they're actually enticing buyers to add more position so they can add their own sell positions. Here in this scenario, buyers will actually see this as a resistance area. The market goes up, come back, they will add more sells, not knowing that the smart money are actually adding their own sell position in the other side of the market. So here the buyers are actually enticed to go long so that they could be taken out by the smart money. So this is what actually happens when the market is about to reverse after an uptrend. So I'll be showing you this stuff in the real chart. So here we have a picture of a trade I actually took using the Wyckoff schematics. You can see it. I actually posted it on April 13th. So this is a trade I actually took using the Wyckoff schematics. So this when the trade actually played out. Let me show you. So this when the trade actually played out. You can see it. I was targeting the next high where liquidity was. So and here is the actual trade that I placed with it. As you can see, so I will actually be breaking down how I actually took this trade, exactly using this smart money, exactly using this Wyckoff schematic, sorry. So I will be breaking everything down how I took it. I actually took the trade during the London Open, the London session. That's where you could see the market uh, volatility. That's where I actually saw volatility. They actually did a stop hunt before they actually started moving up. So I'll be breaking, this is actually Euro CHF, so I'll be breaking it down, everything, and how I actually enter the trade, my entries and everything, even my stop loss, everything. So as you can see on the chart, this is actually April 13th when I actually took the trade from this point to this point. So why did I take this trade? What was I looking what was I looking out for? As you can see, just like I normally say, here we have our order block inside this area. We have another block, forward order block inside this area. So I actually refined it down to the forward time frame. And just like I say, if you want to know if another block will actually work, you have to see a break of structure. So as you can see here, we have a break of structure. We had a break of structure inside that area. We also have another break of structure inside this area. So where is our liquidity? As you can see, equal lows. This is our liquidity. Then where is price at? Price was actually entering our discount zone, our discount level. As you can see, price was actually at our discount zone, 0.786 of the Fibonacci level. So here we actually had early buyers. Early buyers started entering this market right from this point, but they got taken out as a result of the Wyckoff schematics. So I'm going to be explaining how I actually got this trade. So as you can see, price is sitting down, isn't right at the discount level. So let's go down to the 15 minutes time frame. So yeah, here we are on the 30 minutes chart. As you can see, here we have our liquidity right on the H4 time frame. You can see a price actually came, tested here, gave a fake signal. The early buyers got taken out by this move. So you'll be actually be marking out this place as your PS. That's your preliminary supply, support rather. So we have our PS right there. So here is our PS. And after our PS, what does PS actually mean? This is where the market is signaling that the downtrend is about to end. So after that, we had our buyer sellers climbers. So we had our sellers climbers right here. So I'm marking that out as well. We have our sellers climbers. That's the SC. Here the selling pressure is reaching its peak. So after that, we had our AR as the automatic rally, signaling that the selling pressure is actually diminishing. So you mark that out as well. We have our AR signaling that the market selling pressure is actually diminishing. And after the AR, price came back, mitigated another block here, giving us our ST secondary test. So we had our ST right inside this area. After that, price went back up, came back again, broke this structure, signaling a sign of strength. That's as well as sign of strength. So we have our sign of strength here because price actually broke structure. So we had our SOS here, breaking structure, signaling sign of strength. So after that, what next? They took out early buyers. They were actually entering the market. So after that, we had our secondary test phase B. So we had our secondary test phase B. So here is our ST in phase B. So after our SD in phase B, here comes our spring. So this is our spring. So our spring. So this is actually where you will be taking your entries from. Just like I said, if you can't catch your entries right from here, the best way to do this is actually wait for price to break this ST and or the ST. So you actually be entering at the rate test of these places. But as you can see, price after the spring, price actually went high up, and you'll be entering this. You'll be checking out this price movement during the when the market is actually volatile. Just like I said, during the London Open inside this area, that's when I actually took the trade. As you can see, it's actually 8 in the morning during the London Open. My time is GMT +1, so this is actually 8 a.m. in the morning. So I took my entry right here because I actually knew that yes, this is actually my spring, because we had the Asian consolidation inside this area. After that, we had liquidity grabbed. Then after the close of this big green candle, I started to take my entry right inside here. So after that, maybe if you can't actually enter right from the spring, you could actually wait for the test of the either the ST or the seller's climbers. As you can see, price actually came back. It didn't test enough, but at least you would have actually known that yeah, price is actually intending to go higher because we actually broke this area, signaling another sign of strength in the market. So coupling with our other block right inside this area, our H4 order block, this is how we actually confirm this trade. So this is how to actually avoid being taken out maybe when you actually right, to avoid being taken out early in the market. But in any case that you're actually trying to get more decent entries in the smart money concepts and using the other blocks, Wyckoff schematics actually comes out in play most of the times. So you actually be backtesting and reviewing this video to actually get all the things I actually said in this video. I know they will actually help you because it has actually helped me a lot. As you can see, right from this place, the market actually went all the way up. You can see that you would have actually got all those movements. And after that, price actually came back again in the future to test another block inside this area. As you can see, we had another block after this movement. We had another block inside this area. If you check back, you will actually see how price actually came back as well, testing this area, then going up higher. So in this trade, I actually got nothing less than 100 pips. So this is actually our other block as well. We had a break of structure. If you scroll to the left side, you actually see that. Then we had our liquidity grabbed. So everything happens just the same. No complicating stuffs right here. So you would actually go back and review this video, backtest it. I'm showing you after backtesting and training your eyes to see more of this in the charts, you would actually get it right, just like I got it right. So this will actually be the end of this episode. And the next episode, I will actually be talking a bit more on the sessions, to take to get good entries from, or I'll be talking about any other stuff I actually want to talk about. Yeah. You can also follow me up on Instagram, UC3_FX, to actually see more about how I actually trade. So, and I know you'll be smashing the subscription button and the bell notification button, so that I would actually be encouraged to be creating more stuffs and contents like this. Yeah, peace.